This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, welcome back to Breaking Banks Europe, episode, a very special one, number 236. I'm here with Sergey Nazarov, co-founder of Chainlink. Sergey, very welcome to Breaking Banks Europe.
Thank you for having me.
So, in the 5 minutes where we were preparing and chatting about this interview earlier, you talked about tokenization and real-world assets. And I want you to start by telling to our audience why these two concepts are important.
Sure. So tokenization is a broader concept. Tokenization can apply to making cryptocurrencies that might not be backed by anything other than what people are willing to pay for them. And this is the common pattern for most cryptocurrencies. Not all of them, because some of them have utility and various use cases. But cryptocurrency is often something that isn't always backed by some kind of underlying asset or something. The real world asset is, as its name suggests, connected to the real world asset. So it can be about something in the real world that has underlying value. So you can make a real world asset about real estate. You can make a real world asset about carbon credits. You can make a real world asset by taking a fund and turning it into a token. Sometimes it becomes a little bit confusing because people talk about tokenizing a fund into a real world asset. So that's where it gets confusing. But tokenization in general has been around maybe since, even before Ethereum, but let's say since 2012, 13, 14, since those years, about 10 years ago. And it's been predominantly applied to cryptocurrency up until maybe 3 or 4 years ago, when people started generating tokens around other things, with the exception of stablecoins. Stablecoins, I would say, are the first real-world asset that's backed by real underlying value in the history of tokenization.
So, and tell me a little bit, what is the role of Chainlink in all this?
Sure. So Chainlink is the most widely used standard for data and cross-chain connectivity in the capital markets. It's basically the way that you get critical information, identity information, price information, reference data, NAV information for tokenized funds into smart contracts. And all the more advanced smart contracts require access to this information in order to operate. And then it's also the way that you connect smart contracts across chains, and importantly to bank chains, which is where a lot of the value is going to flow in from for the future of the industry. So it's both a solution to get data into chains, and it's a solution to connect chains and smart contracts across different blockchains, creating what we call an Internet of Contracts, where regardless of what blockchain you have a token on, or a real-world asset, or any kind of smart contract, it can interoperate with all the other smart contracts and assets and value on all the other chains, both public and private.
So you just announced a project or a collaboration with two major financial institutions. Can you talk a little bit about it? And also what is exactly the project about?
Sure. So this was with Fidelity International and Sygnum. Fidelity International is one of the largest asset managers in the world. And Sygnum is kind of a crypto bank, investment bank here in Switzerland that's very cutting edge. And they partnered to generate a tokenized fund. So that tokenized fund went onto a chain. And then in order for it to operate properly and be used properly, it needs NAV data. NAV, net asset value data, is the value of the underlying stuff in the fund that needs to be put on chain for people to understand what the fund is worth. So this is an example of a more advanced use of smart contracts and real world assets, where you've made the real world asset and you've defined ownership rights about this tokenized fund. But then for you to have a real understanding of kind of what's actually going on with it, in order to be able to purchase it, you need to know the value. So that's where Chainlink comes in, and it provides the data on chain. I think subsequent steps will be things like shortening the redemption period from month long periods to maybe minute long periods, so that you can redeem the fund more often because the data is available more often. And then the next steps will be moving the tokenized fund across many different chains. That's kind of how I see this and similar things like this evolving into the future. And Chainlink facilitates all of that data and movement of value and data across the various chains that would want to purchase this fund.
So I have a kind of an unexpected question that came up when I was just listening to you. And my listeners know that I'm passionate about Africa, and this is where we do, most of our activities. And Africa is one of the continents that has the most like a CBDC project. So they understand, the value of digital assets. Do you think that, this new way of looking at the business, for example, or giving access to more people in a different way to this type of value has potential also for emerging markets?
Yeah, so generally, I think there's two categories, there's two big markets. In developed markets, what you're doing is you're creating very valuable efficiencies, and you're through collateral management, through this fund tokenization that makes the redemption period a month down to a minute or something. So you're kind of optimizing the current system to do very valuable, useful things. In the emerging markets, you're often doing what's called leapfrogging, which is going from 0 to 1. So in the emerging markets, you've had a consistent dynamic where once technology reaches a certain threshold within developed markets, so once it is easy enough and cheap enough for everyone to get a cell phone, even if they didn't have a landline, they have a cell phone. Mm-hmm. Or even if they didn't have a library, they can access Wikipedia and get that information. So I think what will happen in the emerging markets is there will be a leapfrogging for how the economies there work and how people do savings through their own bank accounts and how they interact and transact commercially. So this is what this will change. And the big shift will be that just like they didn't need to rely on their local system to generate a library for them, they will no longer have to rely on their local legal and monetary system to give them a way to save money, to give them a way to transact with each other, to give them a way to transact with neighboring countries, to give them a way to transact even internationally. One good example of this is something like crop insurance that I always go to in my own mind, because crop insurance in the developed countries is a very common, accepted, readily accessible thing. But in emerging markets, it's inaccessible because the local legal system can't facilitate crop insurance, because it's not reliable enough. There's too much fraud on both sides. It's just too costly and impossible, really, to provide crop insurance or most types of insurance in some of these markets. But with smart contracts and Oracle networks, you wouldn't need to rely on the local legal system. You could verify the status of the weather and the rainfall with the Oracle networks, and then they could trigger the movement of value to the policyholder if there wasn't enough rain. So if there was a drought, then the policy could be paid out automatically, regardless of the local legal system. So I think in the emerging markets, this will change things quite a bit. One of the things that I know we have in common is that we're very interested in how startups kind of get adopted and grow, whether it's in emerging markets or in developed markets. And I know you've had a lot of experience working through these problems with Swift and InnoTribe, where we know a lot of mutual folks, and where I kind of came in to my work with Swift through InnoTribe as well. So I definitely want to hear your views on how has that been? What has been your experience getting startups, whether it's emerging markets or developed markets, getting them to interact efficiently and in a useful way with larger institutions?
So first of all, thank you for bringing me down to the memory lane, and it was a surprise. I didn't know that you had this interaction with InnoTribe. And by the way, Kevin, we have a good friend in common, and I know he's listening to the show. So, it was great actually to share your name with Sergey. And it is true that, the financial industry in general, came a long way. From at the very beginning, it was very complicated to make banks understand the different business model, different asset values, and even getting close to even a generic blockchain project was complicated, right? And and especially, you came, I believe it was 2016,
Yeah,
16,
that period,
17, exactly. And but InnoTribe was there like 3 or 4 years before, and it was even a wider, space where financial institutions were, a little bit lost. The very existence of Chainlink shows that financial institutions came a long way, and even the fact that, that Swift itself, actually made more than one proof of concept with you, and that there is an interaction, and I know you can't share everything, but, I think it would be great to, let's say, because part of it is really belonging to the collaborative space, right? All the infrastructure, part, which is what Swift is born, right? And part of it belongs to the competitive space. So is there anything you can share about what you worked with Swift? Maybe even like the proof of concept that you did. So the example of the crop insurance is great because it makes these things very concrete. So maybe let's share another example of, that you have done with Swift that can be like enlightening for the audience.
Yeah, sure, absolutely. So I think in the 2015, 16 timeframe, this InnoTribe program existed, and we kind of applied to that program because I think from an early point it was relatively clear that Swift was going to play an important role in how the financial markets develop over time. And I think there was a view, and there still is a view, that traditional systems and traditional infrastructure don't have a role to play. But my view, even from the very early days, was that the way to make a system successful is to make it compatible with other systems so that both systems can end up doing something more valuable. That is, I think, kind of the basis on which we went towards some kind of collaboration with Swift through the InnoTribe program. And it was just a startup program to allow early stage teams to interact with the Swift community and Swift directly, which we thought was a really good opportunity to kind of see how some of the work we were doing on smart contracts would be compatible with the plans that Swift had on blockchains. Basically, there were us and a few other blockchain-related firms in there, and I think we ended up winning out in terms of a kind of competition model where we presented a number of ideas and showed the merit of the direction that we wanted to work through. The first the first POC and pilot that we did with them was really around something called a smart bond. And in that smart bond, we generated a interest rate, a reference rate, from a panel of multiple banks, and that was meant to generate data in a way that resisted manipulation of interest rate data, like the type of manipulation that happened for the LIBOR rate, which was a big scandal in the European kind of financial markets. So that's the first thing we did. And then we were able to execute certain events on chain using that data, so proving that the data was useful to smart contracts in the context of a bond, and then to synchronize back the status of that bond through Swift so that everyone could see and understand what's going on with the bond using the Swift infrastructure. The second pilot and POC that we did with them was really on the basis of interoperability. So Chainlink does these two really big, important key functions of data transmission and value transmission. Data transmission is data in and data across chains. Value transmission is usually value across chains and sometimes value leaving chains into other payment systems and mechanisms. And the second POC and pilot was really around interoperability. But in the very early days of this, what really convinced me to work with them was actually the people that I encountered during the InnoTribe process. One of the main people was the person you mentioned, Kevin Johnson, who was my contact and the main person that I worked with at Swift, who was super helpful, helped me navigate and understand the organization, helped me get to clarity on what the actual objectives were and get to like a productive, useful set of next steps. And after interacting with him and a few other kind of senior members of the Swift organization and some of the technical members, frankly, I just found them to be like pleasant, collaborative people. A lot of them are in Belgium, and Belgian people are pretty nice and collaborative and pleasant people. So frankly, I enjoyed the experience of working with them, and I think we saw a bright future. It's been over 7 years now working with them, and we're on our second pilot POC implementation that we've kind of done publicly. my view is that we're on track to do more together, which I'm very positive on, and I think they're positive on. And I think it's the type of thing where you have some of these programs and it's not clear what comes of them. But I think we're a good example of how one of these startup innovation programs actually led to something useful for everybody. And in my experience, what it really boiled down to is the quality of the people involved and how eager and interested they were in actually making it all work. So it wasn't just that there was the program, which obviously was critical that there was a program, but it was actually the way that the people approached the program and helping the startups and making it something useful. So my experience generally has been very positive, and I think it's great that we had a chance to do that.
So tell me, let's talk a little bit about the future, and tell me two things. First is what excites you in the world of digital assets, and how do you see, what are the transformative trends that are going to, because again, this is something that sounds very technical, and but it is technical because it's at infrastructure level. But then the last meter of that, the way you use that infrastructure that you guys are building has to be accessible, right? And so one is, how do you make it accessible? What is the last meter of that technology? What are the trends that excites you? And how do you see the next 5 years of these technologies evolving? Because it looks like from, someone who is not into the technical implementation of this, it sounds like the background of this is really complicated, but the purpose of this is to simplify and spread the access, right? How do you play with this dichotomy?
Sure. So in terms of making it accessible, the Chainlink protocol and various Oracle networks are very low-level infrastructure. Like TCP/IP powers the internet, and CCIP is starting to power the internet of contracts. And the data infrastructure it's very low level. So it's not something that users would interact with. Mm-hmm. It's something that application developers interact with. So in a sense, it's an infrastructure for those developers to use. So we don't actually have the problem of making it more accessible.
Because you're building like the operating system, right? And then and people will use it, but there will be application that will use that infrastructure.
Right. Yeah. So yeah, our problem is not getting some kind of retail user or an institutional user to use it. It's about getting people who are building the smart contracts, building the applications, building the DeFi protocols, building the decentralized insurance protocols to get value and a benefit from using the system for its security and for all the key things that it does for their application. And then they get the demand of the market. This is great from our point of view because it means we can service many different use cases. DeFi, TradFi, insurance, gaming, we service all those use cases and more. And we can provide this infrastructure across many chains. So it allows the Chainlink system to be useful across use cases and across chains, which is something I'm personally very, very thrilled about. The second part of your question, I think around how do we make it something that can properly provide value to people, even though they don't know exactly how to use the system, is that's really a question of security and the security that we generate to secure their funds and make it all work correctly. And then the real challenge is getting everyone to build an application in a way that it interoperates successfully. And that's one of the big challenges we're facing now is how do you connect all the different blockchains together?
Okay. And tell me, so you're building something for third parties to build application on, right? So it is a little bit like if you were a host of a number of different innovation and other entrepreneurs. So how do you interact, with the builders of your system, the ones that are using your system to build, for example, an insurance application? For example, I'm an investor, like a private investor, and there is this insurance startups I invested on. They do collateral-based insurance. They build a new ledger, they put a collateral, and it's a different way of conceived insurance, right? So again, it's very technical, on the background, And the last meter is just, me buying an insurance in a different way. So these startups are your clients, right? The one who are using your infrastructure. How do you interact with these startups, with these entrepreneurs?
Sure. So we firstly, I think the whole Chainlink ecosystem tries to support them, and they become part of the Chainlink ecosystem and use the Oracle networks and the Chainlink technology to build this more advanced application that they're creating. Then once they build it, I think what happens is we have a large group of developers, users. We have a large and growing group of bank kind of executives and product managers and engineers. So we basically have this really big community of folks that are interested not only in Chainlink as infrastructure to build applications, but they're also interested in the applications that get built using Chainlink. And so they end up looking at those applications. We have a lot of hackathons. We have a lot of ways for people to gain exposure for the new things that they've built. And one of the things that we're the most proud of is being the infrastructure and the set of protocols and tools that the newest things in the blockchain industry gets built on. So we, for example, in the decentralized insurance example, I think we had some of the first decentralized insurance protocols working to do crop insurance. We had the first DeFi protocols like Aave launch with us because we were able to provide them the infrastructure they needed to make their lending protocol work through this Oracle network dimension. That's mainly through the data dimension. Now we have many banks, asset managers, financial market infrastructures working with us to allow them to enter the blockchain ecosystem. So one of the most exciting things for me is how do we get people essentially from 0 to 1? So how do we get them from they don't have a live smart contract, they don't have a live startup, they don't have their bank system live, and how do we transition them to a state where they are live, which benefits them, but really also it benefits the larger blockchain crypto ecosystem. And on the startup side, that's basically around getting them into the community, getting them to go to events. We have a big conference in Hong Kong this year. We have that conference every year. And those are kind of the methods we use to help them along. And then with the banks and the asset managers and the market infrastructures, there's all kinds of educational series we have. There's all kinds of events we have. There's all kinds of steps that we take individually to help them go live. So I think what we're really doing is kind of getting everybody into a greater and greater state of readiness, into a greater and greater state of doing something useful on chain. And one of the most fulfilling things for me is seeing these users, both of which are originating or starting in the Chainlink ecosystem, start becoming each other's users. And what I'm really excited about seeing in the future is how a bank user of Chainlink can be a user of a DeFi protocol that's also on Chainlink. And they're able to use that through CCIP, and they're able to use that because they both can rely on the data that's triggering and making sure that the transaction works.
Sergey, our time is up. I think that this is not the last time we're going to speak for a number of different reasons. One's because, with the 0.0 Forum, you're one of the partners of the show. This is not the last time we're coming to 2.0, but also because it looks like you're developing an ecosystem. We are curious to see how this ecosystem evolves. And thank you very much for being with us today.
My pleasure. Thank you.
Thank you.
Thank you.
And guys, it's a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.